Alright, good morning. Thank you guys so much for tuning into today's live stream. It is July 10th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So, for today, we have unemployment claims, the 30-year bond auction, and I think that's it for some of the news that I do want to take a look at. So for unemployment claims, it did get released here at 7:30 Central Time. Turns out unemployment claims they did decrease from the previous month. So for previous month it was 232,000, and coming into from June, it did go down by about 5,000, but unemployment claims are actually less than forecasted. So, the labor market seems to still be pretty stable. Nothing too sporadic here. And that's about it for the news for today. Volatility, I wouldn't say there's much coming into today, right? So let's take a look at the actual technicals here for today. So I do want to start off with the daily time frame and the weekly time frame. So weekly candle here, I am not going to use the weekly candle for this week, just because the way that this isn't the actual true closure. The actual closure of the weekly candle looks so awkward. I don't know why. But we actually closed we actually closed somewhere here on the weekly candle. But yeah, so I'm not going to use the weekly objective here coming into this week. And so for me, coming into today, I would be pretty nimble. This is the daily candle here from yesterday. And with the way that we closed here on this daily candle, I would like to make the narrative for higher prices, right? With the way that we closed, it's just we don't necessarily have any fair value gaps to support the idea of higher prices, right? And there is a SMT divergence here between NQ and ES. So ES, we haven't taken out where this previous week's high is. Let's take a look here. So here, as you guys can see, there is that SMT divergence here. So notice here, ES hasn't taken out previous week's high, and NQ has taken out previous week's high. Because of this SMT divergence, I don't want to force the idea of higher prices, right? I'm not going to demand for higher prices. I am just noting that, hey, we do have an SMT. We are lacking displacement. We're lacking fair value gaps to support the idea of higher prices. So let's not get ahead of ourselves. Even though the daily candle did close bullish, right? And its closure is closer to the high, I don't want to force the idea of us just taking out the daily high, right? And so my approach coming into today would be for me to utilize the intraday time frames. So intraday could be the hourly, could be the 4 hour, could be the 6 hour, could be the 8 hour. And yeah, so that's how I would approach today. Let's take a look at the 4 hour candle and the 8 hour candle. These two candles here are about to close within 20 minutes or so. And depending on how we close on those two candles will give me a morning objective. That would give me a reason for why I want to see prices continue where it should be continuing, right? So if we close bearish here on the 4 hour candle, then I will be targeting the 4 hour low. If we close bullish, then I'll be targeting the 4-hour high. Same concept should be applied to the 8-hour time frame as well. If we close bullish on the 8-hour time frame, then I'll be targeting the 8-hour high. If we close bearish, then I'll be targeting the 8-hour low. So that's kind of my approach here coming into the morning session today. So I'm not gonna force anything yet, right? We close in about 19 minutes and a lot could happen in 19 minutes. So I'm not gonna force anything. And yeah, so that's kind of what I am aiming for here coming into the morning session. Being pretty nimble, not forcing anything, and yeah. So I do want to draw your attention back to the SMT divergence again, right? So here, yes, this high right here on NQ was the high that took out previous week's high. Take a look here on ES. Previous week's high has remained intact. We haven't taken out this high yet. And so because there is this distortion between ES and NQ, this tells me that there is some sort of manipulation within these two assets, right? These two asset classes should be moving in tandem with one another. If one is continuing higher, then the other should also continue to continue higher. However, with this SMT divergence, it's kind of like prices are telling you that, hey, there's manipulation. We have the possibility of reversing, so keep that in mind. That's exactly how I would, that's like kind of the idea that's kind of given to us through prices here, is that it's telling us that there's manipulation in that you have to accept the fact that there could be a possible reversal, right? Whenever there's SMT, you have to accept the fact that there's a possible reversal. If there's no SMT, then you might, it's possible that there's going to be a continuation in that specific direction. So if there was no SMT divergence here coming into today, and with the bullish closure here on the daily time frame, then my bias for higher prices would be a lot stronger than how it is right now, right? But because of the fact that there is SMT, then I'm going to have to accept the fact that there could be a possible reversal. Alright, and there's that. Just watching closely here between how we decide to close on the 4-hour candle and the hourly candle. We have about 15 minutes left, and yeah, so just be patient here. I think I would like to start the pros and cons here with you guys from the previous week, and just some things that I can carry over into this week. So coming into this week, some of the pros and cons that I can carry over from last week begins with taking consistent setups. In every single one of my setups that I take, there's going to be 3 components that I look for. The first is a higher time frame objective. What is the bigger reason for why I want to see prices continue in this specific direction? A model. A model is kind of how am I going to align myself with the higher time frame objective. So for example, if my higher time frame objective was based off of the 1 hour time frame, then my model should be based off of, the 30-minute or the 15-minute, and it should also be suggesting the same direction of my higher time frame objective. So if my hourly candle is supporting higher prices, then the 15-minute candle, for instance, should be also suggesting higher prices. So those two are kind of like the base understanding of the direction in prices, right? So that gives me a narrative of only looking for bullish setups for the next 15 minutes to hourly, right? And so the last thing that I look for is a fair value gap. My fair value gap shows that there's urgency, that there's momentum towards a specific price point. And to distinguish between a fair value gap that gets disrespected and a fair value gap that should be respected, it's going to be determined by the higher time frame objective and model, right? If the higher time frame objective and your model is supporting higher prices, then any bullish fair value gaps should be respected in order for prices to complete the model's objective and the higher time frame objective. That's essentially what my setup is based off of. I'll go over some examples here after these pros and cons, just to give you guys a clear understanding of what a normal setup for me would look like. The second thing that the second thing that I can carry over from previous week into this week is just to continue to pay close attention to SMT. SMT shows me that there's manipulation, right? So the way that I understand it, that is, if there is a lack of SMT, then that correlates to a potential continuation. But if there's a presence of SMT, if there is SMT, then I have to accept the fact that there is a potential reversal. Those are the 2 types of scenarios that could play out. So understand that lack of SMT could mean a potential continuation. Presence of SMT could lead to a potential reversal. So that's SMT, right? The third thing here coming into today is to utilize every single time frame to your advantage. Time is fractal, and because time is fractal, you can apply every single concept to different time frames. And so, like, coming into today, I kind of showed you guys an idea of how I did that. So here, like on the daily time frame, I suggested to you guys that the daily time frame, it closed bullish, but the fact that we closed, because the fact that there's SMT, I don't really want to force anything to happen here on the daily time frame. And so I applied the same open, high, low, close concepts to the 4-hour time frame and the 8-hour time frame, right? Depending on how those candles close, that will give me a objective. And I can apply that to the hourly time frame. I can apply that to the 50-minute time frame. These things happen in every single time frame. So you have to accept the fact that time is fractal. And yeah, so that's kind of my understanding here. That's essentially utilizing time frame to your advantage, right? Different time frames to your advantage, and grasping the concepts. The last thing that I do want to mention is for you to be patient, especially coming into this week where we have made new all-time highs, and we had a really funny closure last week where Thursday and Friday were both half days, and that just kind of messed up with the way that we closed. So it's better for you to be a lot more patient coming into this week, right? You don't want to force anything to happen. I know whenever I first started this whole journey, I would be really excited, or like I would feel urgent to force things to happen. And I've gotten a lot better at that, like, mentality. Is there's no need for me to force things to happen. I understand that these concepts and these setups will occur when they should occur. I have trust in my strategy, and that there's no need for me to deviate from it. And that essentially wraps up the pros and cons. The last thing that I do want to go over here is just some of the improvements. Take consistent setups. Like I said, there are 3 components that I look for before I even press the button, right? So once I'm able to identify those 3 components, then that's when I would, press the button. So take consistent setups. Second, watch closely between the relationship of NQ and ES and how SMT is playing out. If there's, like I said, if there is SMT, you have to be open to the idea of a reversal if there is SMT. If there is no SMT, then there is a possibility of a continuation. It's more probable for a continuation. Third, we are at new all-time highs. So, like, a major objective has been completed. You don't want to force anything here on the higher time frames. So it's better for you to just be a lot more nimble and not too forceful on anything that should happen in the markets, right? The next thing here is pay close attention to the entry pattern. You want to ask yourself, does the fair value gap support the model and the higher time frame objective? And you want to also ask yourself, should this fair value gap even be a fair value gap that should be entered? Should it be treated as a breakaway gap, or should it be treated as a gap that gets rebalanced? And yeah, so that kind of, I just wanted to bring that up because that gives you a lot more understanding of when a fair value gap should be treated, and just the whole concept of a fair value gap as your entry pattern. The last thing here is to track the 10K journey. I'm journaling every single one of my trades that I take in this journey, just to reinforce good habits and just to track how I'm able to implement my strategy and risk management, right? We have about 5 minutes left until the 4-hour candle closure and the 8-hour candle closure. Here, I'm going to transition from the pros and cons back into the technicals and take a look at what's happening here. So it looks like we are most likely going to close bearish here on the 8-hour candle and the 4-hour candle. with the way that we are closing here on the 4-hour candle and the 8-hour candle, it's suggesting lower prices. One thing that I do want to mention here is the 8-hour low is the same low as the 4-hour low and the 1-hour low. Because they have the same low, I can make the assumption that we should most likely complete the 8-hour objective within the next hour, right? That's because, like I stated before, the 8-hour low is the same low as the hourly low. Alright, about 3 minutes left. It looks like we haven't traded back into the discount of this dealing range yet. So discount is that green box there, I just highlighted for you guys. So this is where the low is here for the 4-hour candle, right? And so there's a little bit of a gap, right, where that blue line is between, oh, and we just got the retracement back into premium or into discount right there, that just now. And so I can't really force the idea of us retracing back into discount anymore. Let's see if we could. Here we already did that, so we haven't gotten back into this discount range yet, and that's pretty interesting. How is ES looking? ES isn't as bearish here as NQ, which is kind of interesting, right? With the way that we're closing here on ES, it's not as bearish here on NQ. So this kind of is like a warning sign that there is some sort of like manipulation going on. It's interesting, right? There is a SMT divergence right now between NQ and ES. So ES, we haven't taken out this low yet, whereas on NQ we have. And we just retrace back into the discount of that dealing range. See if we can retrace back into this specific dealing range here. Interesting. Very interesting. Well, I'm still gonna like maintain the same idea of lower prices. I like with the way that we closed here on the 8-hour candle and the 4-hour candle on NQ, it supports the idea of lower prices, right? I would like to see us take out the 8-hour low, which is the same low as the 4-hour low and the hourly low. It's just ES isn't as bearish as NQ, which is a little bit concerning. So my bias coming into the morning session today would be for us to take out that 8-hour low. And let's see here. Let's see, yeah. I mean, I like the idea of us continuing lower. And the objective, the morning objective, would be for us to take out the 8-hour low, which is that blue line. That blue line is the 8-hour low. So we're really close to it. Let's see. And there we go. We just took out the 8-hour low. And we also did retrace back into the discount of the dealing range from this swing high to this swing low. There's that. Now, I don't think there's anything else for me to really do, right? I don't want to force anything anymore here. And so, yeah, I think I'm just gonna have to just, finish what I was doing on here on my journal and call it a day. So I did promise you guys that I would go over a setup, and let's go over the setup here. Random trade, but let's take a look at it. So before I even go over this trade, let's start off with the structure that I always require. Higher time frame objective, a model, and an entry pattern. Those are 3 things that I look for whenever I take a trade. All right, so the first thing that I notice here coming into this setup is that this is a 30-minute candle, and with the way that we closed here on this 30-minute candle, I can anticipate the idea of us taking out this 30-minute high, right? Within the next 30 minutes, we should take out this 30-minute high. So I'm bullish. This is my higher time frame objective. It's very simple, right? That whole concept of open, high, low, close, determining what the next candle should do, gives you a really clear understanding of a bias. It's not concrete, it just gives you a general idea of where you want to see prices go. And so with this, narrative established, right? Because we close bullish on the 30-minute time frame, I'm going to be looking for bullish models on any time frame below the 30-minute time frame. So to align myself with this 30-minute order flow, this 30-minute bullish order flow, I go onto the 15-minute time frame and I notice, hey, this 15-minute candle also supports the idea of higher prices. Within the next 15-minute candle, we should open. Maybe we should open, manipulate lower, take out the 15-minute high, and then expand higher towards the 30-minute high, because that's the bigger reason for why I want to see higher prices, right? So now that I have an understanding of what the 30-minute time frame is and what the 15-minute time frame is, or I guess I have an understanding of what the 30-minute order flow is, and I have an understanding of what the 15-minute model's order flow is, I can now look for a entry pattern. I have to look for any entry pattern, any fair value gaps that supports the idea of higher prices. I had a friend ask me the other day, and he told me, he mentioned to me, hey man, I stopped using fair value gaps because I don't know which fair value gap should be respected. Well, that's very true. It's almost a coin flip on whether or not which fair value gap should be respected or not, right? The way that you can make a fair value gap, or the way that you would understand when a fair value gap should be respected, is based off of these 2 concepts. Bye, ma. Oh. So the way that you understand when a fair value gap should be respected or not is based off of your model and based off of the higher time frame objective. If your higher time frame objective and your model is supporting higher prices, then your fair value gap should be a bullish fair value gap. It's not always guaranteed, right? losses occur, but it's more probable that that bullish fair value gap gets respected in order for prices to complete the model's objective and the higher time frames objective, right? And one thing that I do want to draw your attention towards to specifically here is take a look at this 15-minute fair value gap here. Notice we created this 15-minute fair value gap, prices rebalances into the 15-minute fair value gap, and we create a bullish 15-minute candle closure. This is like very textbook. The way that we are closing here on this candle is almost telling me that, hey, prices is respecting this 15-minute fair value gap. There's momentum towards the upside. Let's ride this wave, right? And so let's go into the lower time frames for a entry pattern. And so here you guys can see I clearly mark out the 30-minute high and the 15-minute high. Because these two highs are different from one another, right? The way that you interpret this is that even though these two highs are different, we should take out the 15-minute high, right? After we take out the 15-minute objective, we shouldn't stop there. We should continue to expand higher, because what is the 30-minute telling us? It's telling us that we should continue higher to take out the 30-minute high. So which is why I have these little arrows here. So here you guys can see the 15-minute open. We manipulate lower into the 1-minute fair value gap, and then we should expand higher, take out the 15-minute high. We don't stop here at the 15-minute high, however. We continue higher towards the 30-minute high. That's the whole idea of this trade. And so going back to the entry pattern, the fair value gap that we create here is this 1-minute fair value gap. And this 1-minute fair value gap supports the idea of higher prices. And so with the way that we closed here on this down close candle, it gives us the opportunity of us entering into this fair value gap to continue higher. And so let's take a look at what happens. Here we rebalance into the 1-minute fair value gap. We respect the 1-minute fair value gap. We expand higher towards the 15-minute high. What do we do after we take out the 15-minute high? We don't stop. We continue to expand higher. That's essentially the setups that I take. These concepts are fractal, meaning you're going to see this every single day on every single time frame. Some setups you're going to not have an entry pattern, which like negates the whole idea of the setup, because you require 3 things for you to actually take a setup, right? But with rules and a strategy, risk parameters, those things prevent you from taking any unnecessary losses. And yeah, so that's the trade that I wanted to go over with you guys. Very simple, very straightforward. There were 3 things that I look for. They all tell a story. And yeah, so that's gonna wrap it up for today's live stream. Hopefully, that gave you guys some context and just some clarity of how I view prices. And I do want to say thank you guys so much for tuning into today's live stream.